Good morning. How are you?
Good, how are you?
I'm well, thank you.
Good. How's your elbow?
I can bend it now.
Oh, it's good. I'm glad.
I was worried because I wasn't able to bend it to shave my head and face for about 2 weeks. So I was about to say that I look like a caveman on camera, but I was able to do that this morning, so I'm clean now.
I'm glad you're able to do so.
Good morning,
Hey,
Francis.
good morning.
Good morning, good
Hey,
morning.
let me get my background up.
Fancy background you got the other day too. I can't do that. There you go.
Okay, let me put my headset on as well.
Francis. All right. And let's see, we got angles, sound is good. Am I kind of dark? Let me see. Cool. All right. Let's wait for Sean to pop in. Do you want to change your name to Francis?
Yes. Oh, why am I on?
I don't know.
Okay, we'll figure that out one of these days.
I don't know. I think you have it saved automatically.
I think I must have a window open.
Oh, you unmute. Yeah, there you go. You muted yourself. You must have a window open that has that box check where it says like keep me signed in or something.
No, I turned it off. You told me last time to disable that. I thought I did. We'll see. One of these days, we'll figure everything out.
One of these days.
Let me go just try the other windows to see if. Okay, good.
Okay. Where are my
Hey,
notes?
Dean, you're looking good, man.
Thank you. I was telling Karen I was able to at least clean myself up this morning after 2 weeks of not being able to bend my elbow to shave. So I was very worried.
Oh,
And I obviously I can't trust my wife with a razor around my neck, So
right. That's a challenge, isn't it? Oh, you
yeah,
did
that's
pretty
true.
Not
good.
why? You should be able to trust your wife with a razor.
Look, if she knows about my life insurance policy, that's a mistake on my part.
Aww.
uh,
Oh,
I
where?
was kidding.
Oh, I know, Karen. I did log on to AAPA account on Zoom earlier, and I haven't logged out, so that probably is a reason. Let me put AAPA there too.
It is
I
10.
shared with you yesterday another program that's being developed, which is called the Main Street Lending Program. It's still being worked on, so it's not finalized or there's a go live date yet. But I figure it will fit nicely into our audience today. That's another program that will be available. I don't know when, but soon, that we can at least let them know and be on a lookout for it.
Okay.
Go ahead.
Yeah, Dan, is that the one in Congress or the one that offered by CMB?
This is to the government. This is also part of the CARES Act.
Right.
Yeah. So the industry is still providing feedback to the SBA, actually to the Treasury Department on how to price it and how to structure the term sheet.
Right.
So that's why it's still back and forth, but we at least know that there's another program. It's not a grant, it's going to be a loan, but for the same purpose of helping small, medium, and large businesses on the recovery process.
Right.
Yeah.
Hey, Dean, do you want to kind of ping Sean to see? He just sent us email earlier, so he may have some technical challenge, or maybe.
Yeah, see, let me text him.
Yes. Okay, your co-host, Francis. Okay, here we go. Here's Sean.
Okay, Sean is here. Okay, good.
All right, we're already getting people. Okay, let's wait for Sean to check in. We have 3.
I'm here.
There he is.
All right.
All right, we're ready to rock.
Ready to rock and roll. We are checking in. Sound is good. We can hear you. We can see you. Can you hear and see us?
Yep, I can hear you perfectly.
Awesome.
Gonna get my lighting.
Okay. Let's All right. Francis, do you want to do a screenshot photo?
Sure.
Okay.
Let me
Ready.
let me see how I can best doing it. Right now, I have the gallery. Oh, you're gonna take it. Okay.
No, you take it. Because
I take it.
my view is
Okay.
different since I'm sharing my screen.
Right now, I'm a little confused as the host. I try to, right now, all of you appear on top with, of the PowerPoint, and I'll
Right.
try to get to the split screen instead of having the gallery view on top. Let me see.
Oh, it's because you signed in as AAPA. So you have the same I have.
Yes. Okay, maybe we'll ask Dean or Dean, would you happen to have a tool to do screenshots?
The print screen? Sean, do you have that?
I have one. I have one. All right.
Okay.
I'm ready when you're ready.
So
Okay,
you are seeing 4 of us and then
Yeah.
the PowerPoint on the side. Great, perfect.
Yeah. So it's just the 4 of us for this print screen. So, all
Yeah,
right.
for now.
1, 2,
We'll
3.
open up later.
All right.
All right. Okay.
Cool. Make sure you save that.
Already did. Ready to and I will. I'll send it to you right now.
Cool. Thank you.
Great, thank you. Hey, Dean, you were talking about the new bill. So are you guys part of the Small Business Majority Organization? Because they are the only other organization that are collecting input from the industries from a small business standpoint. And
I haven't reviewed that in detail. Full disclosure, I haven't reviewed that in detail.
This is the Main Street lending program, correct?
yes,
Yeah.
yes. I mean, the Small Business Majority have been working with Congress and
Right.
also the White House on some of the programming and providing input on behalf of small business.
Okay.
And this is one of the things they're working on now too.
The only issue with that, it's really designed for much bigger businesses. I was on a panel I mentioned to you on Thursday, and while I'm not, that we went over it briefly, it seemed that it's designed for much larger businesses. Dean, I don't
Still,
know.
huh? It's supposed to be for the main streets, all right?
All right.
No.
Yeah, the ticket item is $500,000 minimum, and also the term is very short. Yeah, so it says for small, medium, and large, but really the people who need the size of loan and also be able to repay back in a short-term period. It is not for your mom and pops or your sole props.
So still credit-based again.
Yeah, and it's not free money. It's not a grant. This is a loan you have to pay back.
Yeah. I'm okay with the loan part because the grant, we already got a PPP, but I was hoping that they will make those more accessible for the smaller,
Yeah.
the smallest of smaller small business.
Yeah.
Oh, well,
All right.
it's always the same. Okay, Karen.
So I am going to start letting people in. It's 10:57. I'm going to do the morning intro things and share my slides, and then I'll prompt y'all, and then you'll take it away. I'll just be, again, keeping track of time. I'm leaving it up to y'all to have that organic discussion with each other. And then a speaker session, just depending on time, I have it set in the program for 11:45. So just pay attention to when you guys start and try to wrap things up within 35 minutes or 11:45. If we do need to take time, I take time from the Q&A.
Okay.
If you need a couple more minutes, we can try to like take time from that. And then I'll do a closing and share the resources. Are we all good to go? Yeah. Okay. Cool.
Oh, good.
Hey, Karen, I'm gonna leave and then come back as myself, and is that all right? And then you can assign me as a co-host.
Yeah, that's fine.
All right. See you
All
later.
right.
Then, so we do a quick intro and then we're gonna jump right into the topic, right?
Yeah, I'm gonna introduce you. You'll see each other. I have a slide, and I'll say, you know, these are our speakers, and I'll introduce you. And then I'll just say, like, without further ado, I'll go ahead and throw it over to Dean. And then let's see. Did I have an opening question for you? Or
If you could cook anything, is that the question or just for everybody? What one dish would you make and why?
this is just the intro. Was there an opening question that you wanted me to say to start you off in your content?
No, I'm not good with trivia, so that.
Okay, so I'm just gonna say something like, I'll introduce you and I'll introduce Dean, I'll introduce Sean, and then I'll just say like, Dean, who you are. I'm just gonna list off like your title, and then I'll say, you know, what are some of the challenges that you've been noticing, you know, right now in working at City National Bank, and then I'll just give it to you, and you can start off your content and then bring in Sean, like how we discussed. Does that sounds good?
Sounds good.
Okay, here we go.
Alrighty.
All right, thank you all so much for joining us this morning. Hi, Pac. Hi, Harry. Thank you for joining us this morning. Hello, Jan. Hello, Ton. Thank you all for joining us this beautiful Saturday morning. It is Saturday today. Welcome. As you can see, we are talking about liquidity options this Saturday. It is 11 o'clock. And I do have a little check-in question if y'all want to just take your time, let your audio and video catch up. If you could cook anything, if cooking skills wasn't an issue, what one dish would you want to cook? That's what I'm curious about today. And for those of us just popping in, you're automatically on mute. Since I'm sharing the screen, you have your control options at the top. You do have a little chat box also. If you wanted to pop your little chat box out, you can check in with us with this little check-in question and just kind of say, you know, if cooking skills were an issue, what kind of dish would you want to make, you know, if there were one, if you wanted to be in the kitchen. Yeah, you can share with us. Checking in. Papaya salad. Oh, that brings me back. One of my aunts, she's Laos, and I would always watch her like smacking the papaya, you know, on the thing. I think they call it doom. Yeah, thank you for sharing. Francis, steamed fish. That's really good. Thank you for sharing. Harry, baked Alaska. Wow. Yeah, some really good dishes here, making me hungry. No breakfast people in here, huh? So I guess we're kind of 11 o'clock's like the after breakfast and like right before lunch, so it makes sense. But I like the papaya salad. That hits home a little bit for me. I guess I'm a very like layered person. I don't know what I would want to make. I'm a desserts person, so I would probably want to make a very extensive like French dessert or something that takes like 24 hours to make. That's probably me. I don't know what it is though.
Well, I've been working from home for 2 months now, so I am wearing my quarantine 15, so I am food out.
But like if you had if you had like amazing cooking, like cooking skills was not an issue, like what would you want to make?
Oh, geez. Yeah, I would love to learn how to make the one thing that I had growing up was the mango salad with shrimp.
Oh, that's a good one.
I mean, I've been craving that, and I just didn't have the confidence to follow YouTube to make it, but
It's true.
yeah.
Thank you for checking in, Robert. Hi. I think someone else popped in. Sorry, I missed.
Hey, good morning.
Good morning. Good morning. Hi, Andrew. Hi, Mei Chan. Thank you for joining us this morning, this beautiful Saturday. Always a pleasure to see you all with us. Hi, Robert. I think I said hi to you. Oh, Elaine. I didn't say hi to you, Elaine. Hi, Elaine. Thanks for joining us this morning.
Good morning, Karen. Morning, everybody.
Good morning. We're just talking about my little check-in question that if you could cook anything, if cooking skills weren't an issue, like you just knew everything in the kitchen and like the skills and all the talents and all the, wood gang putt kind of stuff, like what one dish would you want to cook? Hi, David. Thanks for checking in with us this morning. We had papaya salad, we had steamed fish, we got baked Alaska. I'll give y'all maybe one more minute to pop in with us, and then we are gonna go ahead and get started because it is Saturday. It's Saturday. My days are revolve around the Saturday workshops now. I don't know what day it is anymore, and sometimes people are like, "Oh, have a good weekend," and I'm like, "Is it weekend? What day is it?" And then lately people are like, "Have a nice long weekend," and I'm like, "Why is the weekend long? I don't understand." There's a holiday. There's a holiday. Oh, okay, got it. Apparently, there's a holiday on Monday, y'all. So if you're like me and you didn't know Monday was coming up or that Monday was a holiday, I'm letting you know now. So thank you all for checking in. I am your calendar person. Today is Saturday, just to let y'all know. And of course, y'all knew that because you're here. Elaine, thank you. Tiramisu would be the dessert. I like to make dessert. I am also dessert person. Ton lechon. Ooh, that's a good one. Like a whole pig. Yes. That is very expensive, actually. We would take a lot of work to do that. All right, y'all. Well, thank you for checking in. Thank you for listening to me ramble. That's typically what goes on in the first 5 minutes of our workshop. So thank you for consistently coming to listen to me ramble. I really appreciate that. And that makes me feel really seen. So thank you for joining us. Today, we're talking about small business liquidity options. It is Saturday. It is 11:04. And if y'all don't know me, I am Karen. I am the programs director with AAPA. And thank you all for popping in. Thank you. We're going to go ahead and get started. So for folks who aren't familiar with AAPA, Asian American Professional Association, this is us. This is a small nonprofit. We are essentially providing professional leadership skills and training for our minority professionals. We have 3 main programs. We have a mentorship program, board leadership program, and our Toastmasters program. And we are actually still taking registrations right now for our mentorship program. And due to the pandemic, we've significantly decreased the price of our program to $95 because we know folks have been financially affected. And we wanted to make sure that we have our training and content accessible for folks. And we have a great network of mentors who you've heard of in our past, idea talks, but that, you also receive guidance and support. One thing I continually mention is that if I had a mentor, going through my career process or even in college, helping me through and giving me guidance and support, or even just as a soundboard or someone to reach out to, I feel like I would have gotten to where I wanted to go a lot faster. Not to say that, we are not capable human beings, but it's just sometimes when you have that experience from someone else to kind of teach you and hold your hand, not necessarily hold your hand the entire time, but kind of guide you, it makes a difference, especially in the path that we take. So that's essentially what we try to create, is this network of support and guidance for y'all within our mentorship program. So check us out. we have that. Then we have our board leadership program, which is also amazing, 6-month program where we create a pipeline of leaders to sit on nonprofit boards. We had our first session last week and it was absolutely amazing. This cohort is great, but it's really bringing visibility and creating change within our communities and how to like give back, right? And to help each other out and strengthen our community. And our Toastmasters is to help you strengthen your voice, to find that voice and to help you strengthen it, speak out, practice your public speaking skills. I probably need to go to a few more Toastmasters meetings. So that's me. But thank you all for joining us. Those are our 3 main programs for AAPA. And we have our idea talks, which we've launched. This is I think our 7th idea talks, and we're super proud of, these talks. It's mainly our answer to what's been happening with the pandemic, us bringing, content to you that y'all want, especially because of what's going on right now. So we've talked about a lot of different aspects for employees, for small business owners. And, today it's going to be a very, very amazing discussion. And for those of y'all, again, just logistically, you're automatically on mute when you pop in. You have your controls there for you. You see me sharing the screen. There you go. I forgot to change the slide when I was talking about that. But this is our agenda for today. Welcome intros. I just did that. We're going to go into our alternative lending sources discussion with our amazing speakers. We're going to have an opportunity for y'all to share some questions. So we'll have a Q&A for you all there. And then we're going to share some resources. So we have some amazing resources for you. And again, some great speakers for y'all to hear from. Your mute controls are there. I'm going to go ahead and stop share screen for now. So, oh, actually, no, I'm still sharing my screen because I made amazing slides for y'all to see. And so, yeah, I am going to introduce our speakers for today. And y'all seen the flyer. It's super amazing because, our speakers are amazing. So first we have Sean Salas, who's the CEO and co-founder of Camino Financial. It's a data-driven financial technology company pioneering affordable credit and financial products to U.S. Latinx businesses. So it's really cool because Sean's really helping out Latinx folks, businesses of color. And we all know that traditional lending right now, it's a headache. There's a lot going on. And we have someone, our other speaker, Dean Bowie, who's the Senior Vice President, Group Product Manager at City National Bank. Dean leads a product team that focuses on small businesses and consumer loan products. So what's really cool is that we have folks today that are really in the community, looking out for the community and sharing with us some non-traditional ways of, lending, right? And how to get funding. So I'm really excited about the two of them, having this really in-depth candid discussion today. I'm just going to let them have at it because they're the ones that have like the inside scoop right now that we all want to hear from. So Sean and Dean, thank you all so much for joining us today. I'm going to go ahead and get us started. If Dean, you can go ahead and tell us like what are the challenges that you're seeing right now, especially with lending. I'm going to go ahead and stop sharing screen. If you want to go ahead and unmute, share with us this amazing story.
Fantastic. First of all, thank you, Francis and Karen, for hosting this and giving me this opportunity to co-present with my good friend Sean. And also to the attendees for giving me this opportunity and listening to what we have to share. For me personally, I'm very passionate about this topic. Not because of what I do, that's important too, but one is because I am a first-generation immigrant from Vietnam. Two, I had a small business to put my way to school. So this is, my job feeds into my passion growing up, and it's a personal commitment and passion of mine. And so I really appreciate it. I second to you comment to Karen about the mentorship. I owe my 22 years of banking career to one mentor who has always been there for me. And so I strongly encourage people to participate, and those who can be a mentor and give back. And lastly, full disclosure, I'm here to share with you what I see, learned, and my experience. But please note that these are just my personal opinions. They are not the position of my employer. but I do lean on to the things that come across my desk, things I read, people I talk to share with you. And very briefly, and then I want to introduce Sean as well, and we can go into the main topic. But we see what's going on today in the small business lending space, the same experience that we saw in 2008 and 2009. The industry has learned a lot from that and has evolved a lot. So now we have additional opportunities for small businesses that was not there before. And then that's where Sean and his company comes in. And also we know there are options available to small businesses. We have just gone through the SBA Paycheck Protection Program. We just gone through the Economic Disaster Injury Loan Program and grant. Those are through the government. And then from the traditional lender perspective, banks or credit unions, we have seen some changes. And so that's a teaser of what those changes are. But the good thing is, with Sean on the call today, we have the perspective of a traditional lender, and also the perspective and a new option from Sean's perspective. Hey, so Sean, if you don't mind, I'll toss it back to you for your quick intro, and you and I can go into the different options that you and I are seeing.
Absolutely. Well, first of all, it's a pleasure to be on this panel, especially to share this panel with Dean Bui, and I really appreciate AAPA, Francis, and Karen for making this forum available for all small business owners. So thank you for taking time on your Saturday to have this discussion. And it's worth also acknowledging the support of all the supporters in our industries, whether you're in the healthcare industry, whether you're focused on emergency response, and people that are working in essential businesses, such as the cashiers at your grocery store. Those are really the heroes here, and I just want to acknowledge them at the onset. I also want to acknowledge Dean because he's a very modest person, and I think it's worth noting that he's going to give it to you straight. I've been on a lot of panels with different bankers, and what Dean's going to bring to the table, and I've only mentioned this because this will help you craft your questions for the Q&A session for the last 15 minutes, is one, he's in the banking industry, but he understands fintech cold. He has a pragmatic mindset in knowing what banks are really good at and what they may not be good at, and being open-minded about even tossing some opportunities to fintechs. It takes a lot for banks or any banker to say that, right? It's almost accepting to an extent your limitations, and I've heard more often than not bankers take a more defensive approach at seeing and being open to working with, partnering with fintechs. And I think Dean has been someone that has taken a more offensive approach in embracing fintechs. And so it's worth noting that that's the perspective he brings to the table. And that's why we've been friends for, wow, I think 5 years. It was our 6-year anniversary at Camino Financial yesterday. And I think I've known Dean for about 5 years. So he's known us since the ground level. So I think it's worth noting the perspective that Dean brings to the table, and why I think we're going to have a very candid conversation. And I want to warn you as well, you may not like what you hear in this panel. You may not, we're going to acknowledge the realities of our situation, the limitations of liquidity in the short to medium term, but also the opportunities that lie within our respective platforms. Because of course there's opportunity. And I'm not saying doors are shutting permanently, but I am acknowledging that there is we're in for a real roller coaster, everybody. This is definitely not going to be a V-shaped recovery. I don't even know if it's going to be a W, right? In terms of a resurgence and then and then of course the economy comes back. I think there's going to be a prolonged period of ups and downs. And so I'd like to share a framework and start this discussion with the framework. So just to position the framework in the easiest terms, think about it as a 3R framework. Okay, there's going to be 3 stages of how capital is going to get into your hands post-COVID. The first stage is the relief stage. Okay, relief stage implies that it's pretty much going to be subsidized capital to plug a hole in your business. It's not going to be designed as a capital solution that is going to help you necessarily grow your business, but for inherent in the Paycheck Protection Program, that's exactly what it is. The government is acknowledging that you are potentially not making any sales, but they want to keep your employees in business, right? So that you can give them a paycheck, right? And not only that, there's a big feature in this PPP program that basically states as long as you use the capital for certain purposes, we'll forgive the loan altogether. So from a capital provider's perspective, there's money. The government actually needs to print money in order to put this money out. And of course, the distributors of this capital are banks like City National Bank that have been doing a spectacular job at moving money. And we can talk about that in a second. The second stage that I'd like to talk about is the recovery stage. Now, I want to tell you right now, the recovery is going to be no less than 6 months. It could potentially take, based on our estimates, 3 years. What do I mean by that? I think that we are going to enter into a new normal. I know that term is being broadly used, but it's worth recognizing. Industries are changing. Today, Hertz actually is one of the biggest, highest profile company to claim bankruptcy. They claim bankruptcy today. And there's going to be a lot of other companies that you would have on its face potentially not expected them to be hurt by this, or hoping that they wouldn't be as impacted because there would be a quick resurgence, that V-shape, right, of the economy. And unfortunately, we're starting to realize that that's not the case. I'll give you another example. Corporate real estate, there's no surprise that they're going to be adversely impacted. Already Twitter, Facebook, and many different tech companies and peers that I know very well are actually deciding to go permanently remote. So the world of corporate offices is going to change permanently. And what about all the small businesses around these corporate offices, right? They're going to be impacted too. Or at least the sales won't recover to what they were before COVID unless there's some transformation that happens within that business, right? Now, the capital that's going to go into these businesses, I think it's safe to say that now the biggest distributors of the capital will most likely be alternative lenders, to an extent banks backed by government funds. Okay, now these terms of these loans, what I'll describe as below market terms, which actually is a good opportunity for you guys. You're going to probably be able to access capital at terms that are the lowest that you've seen. But because there's a tolerance, not for losses like in the relief capital, but a tolerance for, hey, you know what? I understand this capital is really, it's here to buy you time and give you some leeway to reinvent yourself. And so for that, we're going to be a little bit more flexible on the terms, potentially give some more deferment structures into those loans, but there will be an interest rate involved. The deployers of this capital do not want to lose money. There may be some tolerance for generating below market returns, but there's still an interest rate tacked on to the recovery capital. The third stage, I'd say, is the reinvention stage. This is really truly where we adapt to a new normal, where the products, and specifically credit products offered during this stage, will be potentially different. They're probably going to look at business differently. They're going to probably leverage big data differently, and some of the learnings that the fintech industry has brought to the industry as a whole. And also, it's going to be a recalibrated underwriting model for the new types of businesses, or the reinvented versions of these small businesses. And so we need to think about that as well. So those are the three stages: relief, recovery, and reinvented stage. And it's going to be a long haul. And I'm happy to dig into the conversation, using that framework if you like.
So from the traditional lender perspective, what were we seeing in the industry? So the typical loans and lines that you have today with your bank or credit union, those products are still there, but they are the staple of the product set. But what we have begun seeing is the lenders are scaling back. So for example, by scaling back, there could be a couple of things. One is that they're tightening the credit box, right? The underwriting parameters. Or, they stop offering competitive pricing. You may remember, prior to this, you may see banks offer loans and lines at prime minus 50 basis point, minus 25 basis point. But the prime rate has dropped so much. Now it's pretty cheap now to borrow. So from the borrower perspective, the loan rates have come down. What it means to the lender is the margin is now compressed. But the cost for the lender to service and board and do all the underwriting hasn't changed. So now the margin even tighter.
They get tighter though, Dean?
Exactly. Absolutely.
Get tighter?
Yeah. And so the rate that we can charge on a loan is now lower, but our costs to do that haven't changed. And so the margin is tighter. So then it takes away the financial perspective, the economics for the lender to do small dollar loans. And by this, right, and this is exactly what we saw happen in 2008. Because of the economic crisis, the traditional banks and credit union just stopped lending for the same reason I just mentioned to you. But that decision opened up an opportunity for a new way of business, a new business model for Sean's company and others to step in and fill that void. So what we're seeing that lenders are scaling back by not offering competitive pricing, tightening the credit box, taking a very defensive position. And for those loan programs that are tied to the equity, it could be your home equity line of credit, or it could be a business that ties to the equity of the business. We have seen lenders also lowering the loan to value. So for example, you used to be able to loan up to, let's say, 55% of the LTV. Now it could be 50 or 45, so it's scaling back. Lenders are still going to have those lending programs available. They just change their approach to how they're going to manage those programs. And so by scaling back on the parameter, on the credit box, the LTV, not offering so much pricing promotions, it all backs into part of that is very expensive and time consuming for a lender, a traditional lender, to take a loan application, a small business loan application, and go through the process to review, approve, and board it. And so net financially, there's not a lot left for the lender to make.
Yeah. And so if I were to paraphrase what you're saying, Dean, and I think it's worth noting for everyone on the call, is that in many ways PPP was a one and done deal, right? Very focused on the relief stage, right? But as we think about entering the recovery stage, well, there'll be certain elements of your cap structure, like the interest rates overall are coming down. Your transaction costs are still pretty high relative to the compressed margin that you would need to offer in this market environment, right? Or the compressed pricing that you would need to offer in this market environment, which makes a bank want to tighten their credit box during the recovery stage. And that's exactly what happened in 2008. For everyone if everyone was looking at Q1 reports of banks across the board, and I'm not singling out City National Bank, Wells Fargo, JP Morgan, Citibank, they are already increasing their reserves for losses quite a bit. So that also increases overall cost of lending in this new market environment. So I just want to qualify that, because everyone's like, wait, but the Fed brought down the interest rates. It's like, sure, because that's the part where, like, in a way, government's helping subsidize below market returns. But you can't forget about all these other costs, right? Including your legacy loan portfolio, okay? And so that's really important that you know that. And that's what we saw in 2008, right? We saw that banks started pulling back, and then alternative lenders started coming in. Now, I want to caveat one thing, right? Now, okay, then, so the intuition that, once again, real talk here, the intuition that one would have is, okay, great. Well, now it's alternative lending's opportunity to step up again, right? And we will, and we are. But I want to qualify a few things that are fundamentally different this time, even for alternative lenders versus last time. Number one, alternative lending was a new industry, the nascent industry in 2008. We didn't have our own legacy loan portfolio to worry about going into 2008. On the contrary, right? We were free of any loan portfolios, and we were going into 2008 fresh. And so it's really important that we acknowledge, one, that there's legacy portfolio that we need to manage during these difficult times, which once again increase the cost of our infrastructure. Number two, we don't have access to deposits or even being able to borrow from the Fed at a lower interest rate day one, right? Banks have more of that flexibility versus us. Now we're looking, including Camino Financial, to partner with different types of funders that are designed, that have a tolerance for lending at below market rates in this new environment. Because before, our funding was really calibrated for a growth expansion market that we all experienced for 11 years, okay? And number three, and I think this can be a strength, but also a potential weakness, is that our data sets, right, our alternative scoring beyond FICO, which is something that fintechs have hung their hat on, it presents a strength and a weakness. I think more of a strength than a weakness, but I want to acknowledge the weakness. It's very hard to underwrite, period, in this new environment, right? This is not, we didn't go into this recession, right, because the fundamentals of business were wrong. No, we're talking about an invisible enemy, a global pandemic that's almost impossible, if not hard, very hard, extremely hard to model for. And so we didn't bake this into our model, so to speak. We baked in economic volatility and cyclicality based on big data sets, but we certainly didn't bake in this nuanced situation. At the same time, we do have access to big data, and we're not afraid to use it. Dean, you and I have talked about this, that, sometimes bank, for a variety of good reasons, even regulatory reasons, need to be a bit careful about jumping into big data as aggressively as unregulated fintechs do. But this ultimately, I think, will give us the flexibility to react. But I want to leave you with this notion that yes, money will come back. Yes, we see opportunity, and we have the flexibility using big data to be able to move capital more efficiently than even banks during this recovery stage. However, it's not going to happen from one day to another. I know a lot of you are probably asking me, okay, or want to ask, okay, but what are the capital solutions today? Yes, you can come to Camino Financial, you can apply for a loan, and we're still open for business. But I would be lying to you if I didn't tell you that today we too have restricted our credit box for this recovery stage. And we're calibrating that credit box and our capital partners in order to lend more efficiently for the times being. So I just want to leave you with that, but I want to toss this back to Dean, because I'd be curious to get your reaction specifically on, what are your flexibilities to use alternative data in a regulated industry? And to answer a question that was asked, alternative lending is regulated at the state level. There's the Department of Business Oversight that oversees alternative lending here in California. and their state, but in California is the most regulated state of all states. New Jersey being called secondary, and however, banks are in a very different place than alternative lenders. So I'd like to push this back to you, Dean, and get your sense, right, on how what you think the pace of reaction will be, during this recovery stage for banks, and potentially how you're going to leverage big data sets or not in order to get you to move more money into the market.
Yeah, talking about leveraging big data, it's an uncomfortable spot for traditional lenders because our histories and everything that we have done based on the tangible, the financials of a borrower. That's what we ask for. Your tax returns, bank statements is something that we can see, touch, and feel. And Sean, and you through your industry, you introduce a whole new set of data, including so let's clarify too. When you talk about big data, you talk about could be right the Yelp reviews. Right? I think those can be quantified into something meaningful for you can monetize that. Those whole kind of new big data is the traditional lender perspective is not very comfortable with, and mostly because we are a very, very tightly regulated industry. Not a fintech or not, but just different set of requirements. We have to be mindful of the safety and soundness of a portfolio, and so it's not just from the lender perspective of adopting big data, but also from the regulatory perspective. Are those bodies comfortable in accepting this new data as part of our underwriting parameters? And I don't have a sense of that's even there yet. And so by default, then we stick to what we know and we have tried over many years and decades, which is the traditional financials. Now, there's also a new trend of the marriage of traditional lenders with fintech. We've seen a lot of that, where some of the big ones, where they could take some components of the big data. I like the example you said about a restaurant in LA is not the same as a restaurant in New York, wherever, because it takes into account not just the microeconomics, but also the macro, what's going on around the community. To example earlier, that would affect the performance of the small business. And I think this is the beauty of people like you who can have access and feel comfortable of using that big data and make sound judgment on that. But for those of us on this side of the brick and mortar, that is a new concept that is still in very early stage of we know it's happening, but I know that it's not something that's being fully embraced.
Yeah, that makes perfect sense. So now the question is, and for the small business owners here, how are alternative lenders going to leverage big data and view your business during this recovery stage? And that's important, right? And so I want to leave you with a few takeaways on this front. One is focus on business fundamentals. And I know that sounds boring, and I'll get into something that's less boring, I promise you, but I want to anchor on the boring stuff first. Focus on the business fundamentals. If you're not actively rationalizing your business costs and giving yourself what we call in the venture-backed industry runway to survive during these and make assumptions that are tough on your top line. Don't assume that money is coming back right away. Leverage the relief funds to cover the gaps, which that's what they're designed to do, to cover those gaps. And then of course, start evaluating alternative lending or outside capital sources to further cover those gaps, which it will be designed for that. I will tell you, we understand that people are not, like, usually there's zero tolerance for like, hey, you know, this is money to help you grow and just, you know, and you're good. I think there's some tolerance around, look, the risk is going to be higher. We will price for risk, but at the same time, we do, ideally, you're getting access to some level of subsidized or tolerant capital for the recovery phase. But at the end of the day, we're going to focus on, we can look at any data set that looks, you know, like for instance, whether it's Yelp, not only will we look at like the ratings, we'll look at the frequency and like, when was your last 10 Yelp reviews? Is there a high frequency of engagement with your customers online? And then we also use data for fraud detection, which is not relevant here, but in the context of just so you know, we know how to detect fraud and how fraudsters try to kind of game the system, so to speak. And so that's where big data from, you know, data that metadata on how you complete the application, how you calculate your loan is what we use too. So there's really a lot of creative ways in which you can use big data, whether it's to underwrite and price a loan versus potentially avoiding an altogether fraud risk. Now, so that's the boring answer. Now let me give you the not boring answer, but this is also a call to action. And the call to action is adapt or die. It's that simple. Adapt or die. The reality is that, using the example of a small business that heavily relies on corporate office traffic, for instance, right, is going to be something that they're going to be hurt, period. They're going to be hurt. And if they don't adapt to the changing environment, right, that they are in, they will not be able to survive. Because a lot of businesses, as we know, there's a great survey by one of my good friends, Claire's, that works at the New York Fed, clearly stated that typically a small business has between, the median business has between 2 to 4 weeks of cash flow. So, you know, while you want to leverage outside capital to fill gaps, whether it's relief capital from the government, the best type of capital that will help you weather the storm is good old-fashioned revenue, right? And so we need to adapt our businesses. I'm not saying pivot our businesses. That's different. Pivot means you're changing your business model altogether. You might as well close and reopen a business. No, I'm not saying that. Let's anchor back on the restaurant example. And I'm not assuming people here own restaurants. I just want to give you an illustrative example to give you a sense of what I'm talking about. All right, if you're a restaurant that most of your volume is on office, from office traffic, okay, I would want to evaluate your digital footprint. I would want to evaluate your pricing on your menu. I'd want to better evaluate your cost structure of your menu. I want to evaluate your distribution channels, whether they're on Uber Eats or DoorDash. And if those margins aren't making sense for you, you need to reevaluate once again the pricing of your business. I want to evaluate how you're marketing your business digitally. I want to evaluate how you're reaching out to pre-existing members that have worked with you, or clients that have worked with you in the past. You can leverage your Square system or whatever point of sale system you can. Usually you can collect some level of data on your customers and do campaigns, discounts, not only to reach out to them to order, but also incentives for them to come back. Yesterday I ordered Thai food, and guess what? They had a beautiful 10% discount for my repeat purchase, and they encouraged me to do it directly with them versus DoorDash, because DoorDash hits their margins. These are the types of adaptations that we need to do that we may have not been thinking about in the past. And yes, these aren't new themes. Being online is not a new theme. This has been something, but now these themes have been accelerated. And if we do not adapt for the times, we will die. You know why? Because other companies will take advantage of it. However, and I want to leave you with a very positive note on this. We're in quarantine. I'm getting restless. People are shopping. They want to shop. They're going online, and guess what? the economy will come back. Businesses are resilient. Americans work hard and we play harder. And so you want to be at the intersection of that new sale, but the sale experience will be fundamentally different. And of course, as this new normal and these adaptations take place, yes, us alternative lenders will find a way to use big data to qualify the adaptation of your business. We're calling it a Camino resiliency score to assess the business, but it comes back to that boring thing. Is your business fundamentals making sense? Are you making money? Are you managing your costs? Are you properly formalizing operating your business, right? And that essentially will drive credit decisions. And guess what? After the recovery, we get into the reinvented stage. And I promise you, banks like City National Bank will be waiting for you with their arms wide open. And it's not banks versus alternative lenders. As you can see, we actually all have different purposes. We all have different sources of capital. We're all regulated a little differently. We all have different flexibility in what tools we use to assess credit. So it's important that you be aware of the different players, that you don't think of them as either mutually exclusive or opposed to each other, but you expand the way you partner with different capital partners for different times.
Hey, thank you, Sean. I really appreciate it. I think what the summary of this is that we are here, you and me and our industries are here to support the small business community. And the beauty is that as a small business owner, you have options now. Right? You can choose to come to a bank, to City National or to Sean, because now that you have met Sean and his company, or you can go and you can Google and you have access to other options. And you pick the one that best fit for you, the right product, the right structure. I share with my team, even when we look at our competitive landscape, we no longer look at traditional bank as our nearest competition. It is actually Google. Right? If a small business go online and Google for a small business loan, right, that is their gateway into shopping for loans. Mm-hmm. And company like Sean and other will be, right there in front of them to click on. And there are matchmakers who would match, a business need to a lender or lenders that may not be your closest bank from your office. It could be a lender on the East Coast or wherever, right? That has a loan product that fits for you, that fits your business need. And the beauty is when we borrow, we really don't care where we borrow from. We just want to get the best rate, best term, quickest as possible for our business. And unlike on the deposit investment side, where we need to know where our money is. But when we borrow, we just try and get our hands on the money for the best price. And so our perspective, the industry has changed. We know that our clients now have more options. It's not saying that the traditional lenders have closed the door. It's just that everyone is taking a step back. But at the same time, to you as a small business owner, you have options. And that's my point, is that you can talk to your incumbent bank. If they can't help you, maybe you have maxed out your capacity with this particular lender. Sean here, he can look at different data point with its big data methodology and say, what, based on what I'm seeing and my comfort level, I can help you with that, bridge that gap, whatever that is, to cover your expenses, your payroll or vendor invoices. So together, the whole industry working together to make capital available back. Last point I want to leave is, there are lenders out there who have programs for minority business owners, veterans business owners, women business owners, and that fits into the lenders or the banks called the Community Reinvestment Act. So as typically banks have to make a commitment to helping the communities that they do business in by reinvesting and that, putting money back into the community. So they have different loan programs, like I just mentioned. And so that's another angle to look at it as well. It's just not from a bank A, bank B, or Camino Financial or other, But if you want to look at those who have programs that focuses on, the specific I just mentioned, that's another option to you.
Absolutely. Karen, did you want to leave some time for Q&A? I know we're at 11:46 now.
Yeah, thank you all so much. Wow, such great information. And yes, very candid. I know it's very hard to hear sometimes that we are in very difficult, changing times, and we're all having to adjust, right, and adapt. And I know when you said adapt or die, I'm sure a lot of folks got some raised eyebrows and their ears perked up because they're like, adapt or die. And I think someone put that in the chat too. It was like, adapt or die. And yeah, it's difficult. We are in difficult times. Pivoting is one thing, adapting is another. And you're definitely right to point all these out. Gabe, I don't know if you wanted any more extensive description on that. But I know Francis had a question too. How will a borrower tell their recovery and reinvention businesses to an alternative lender? I don't know. Did you want to expand on that question, Francis?
Sure, Karen. I guess different from the traditional bank, they have all the numbers that they traditionally get, the fundamentals. Now, you mentioned a lot of things that is not in paper, not strictly numbers. Seems like you're looking for their approach, how they plan to manage their business in the future, as well how they have adapted. So how does a borrower provide those information to you differently than we would normally send it to the bank?
Yeah, no, it's a great question. So we're working on the structure. We're actually structuring a fairly big fund along this thesis. So while it's not fully validated, I can tell you how we're literally actively thinking about it right now. And we plan to release that fund, which will have subsidized capital available to small businesses. It won't be 1%. I'm telling you that right now. That's for PPP. And so please stay abreast of what we're up to. But to answer your question, Francis, what we're looking at, number one, is we want to look at how you were performing at least for the 3 months before COVID happened. So anticipate getting a lot of questions around your bank transaction data pre-COVID. We're going to look, of course, post-COVID, but we will have some level of comfort around a drop, right? But we will want to see some level of recovery, maybe not at the same levels previous to COVID, but some level of recovery. And ultimately, at the end of the day, back to the boring fundamentals, we want to make sure that you have enough cash flowing through the business so that you can repay that loan. And so that's essential, number one. Number two, we will look at industry risk. And if you are in an industry that's been heavily impacted, there's going to be more emphasis on the cash flow improvement than probably an industry that's been less impacted. Because yes, we do use segment level analysis to be like, all right, here are certain industries that are essential industries that, maybe will be more tolerant about volatility in their cash flows if they're in the industry that overall is in the up and up. But the same is true for a company that's, for instance, a restaurant, right? We're going to take a harder look at restaurants versus grocery stores, period. That's going to happen. And so you need to know if your industry, I'm sure you do know if your industry has been heavily impacted, and that's going to put more emphasis on some of the fundamentals that I was talking about. And that may require you to adapt a little faster, demonstrate longer periods of stable cash flow during this recovery phase.
Hey, thank you, Sean.
Thank you, Sean. Thank you for that. We have another question, Mei Chen. For a newly started small business, what would be the key criteria considered for granting them the loan?
For a newly started business, I'll be the first to tell you, getting funding for a new business is always hard. COVID, no COVID, as you all know, I think over 90% of businesses fail in the first 7 years, and the great majority of the failure rate happens in the first 2 years. And so it's very hard even for alternative lenders, let alone banks, correct me if I'm wrong, Dean, take early stage capital risk. And look, at the end of the day, fundamentally, you may not have cash flows, right? If you're barely getting started, depends what stage of your startup experience you're in. We do, by the way, just to qualify, 14% of our businesses have been in business between 9 months and 2 years. So that's 14%. It's not nothing. But what we do is we look for a lot of emphasis on, once again, the cash flow fundamentals, healthy transaction volume in your bank statements, healthy account balances, and just overall a growing trend in the business. Those are those. But let's say, for instance, you're a startup that hasn't, is not generating revenue, or a very limited revenue. Then this is the creative process of finding outside. There's crowdfunding opportunities, leveraging your savings. This is very risky, and I don't condone it, but people do it, statistically speaking. So I'm just going to share it. Credit cards, I don't condone it. I don't think you should do it. I'm just telling you how people try to figure it out. And you always hear these stories about credit, entrepreneurs that use or home equity lines. But in this environment, you need to be very careful. I will say the flip side of that is that starting in this environment is great because you don't actually really have to adapt or pivot in any way. You're building in a new normal. So in essence, that gives you an advantage relative to incumbent businesses because you can adapt to the new.
Thank you for that, Sean. Very important. And then I think we're running a little low on time, so I'm just going to take another comment. Hokil, adapt or die. One of the rallying cries from the .com era. Most of folks on this call probably are too young to know. But I think most of us know, virtual, and then like Sean had said, this virtual and being online is not new, right? So thank you all so much for sharing all of this amazing information and the 3 R's framework: relief, recovery, reinvention.
Hey, Karen, I think there's one question from Mei Chan.
Yes, wasn't that the question that I asked for Mei Chan? For a newly started small business?
Oh, okay, that's right, yes, yeah, the new business, that's right, thank you.
That was the question from Mei Chan. So thank you, Sean, for answering that and such in-depth information. And yeah, very, hard to hear things but truth, right? And I think sometimes it's really difficult for us to hear the truth with all the misinformation going around right now. We do want, easy access, right? Convenience, because we come from a society built on convenience. And that's partly why we are where we are.
If you don't mind, I'd like to end on a positive note, because I do acknowledge that the adapt or die and the limited options can sound very dire. But I'd like to end on a positive note. One is we're also an economy built on credit, and there is capital out there that's idle, that's waiting. There is an essence of waiting for the dust to settle, right? And I do think that waiting will take some time. I think we're 3 months into it. I think it could take, we're transitioning into recovery. So from relief to recovery, we're in this transition phase. And I think, we're only maybe, if anything, max 3 months away from completing that transition into the recovery phase. And a lot of like, for instance, Camino Financial is a clear example of a company where we're, once again, stay abreast of a fund that we're launching. It's going to start with a relatively small amount of $10 million. We expect to expand it to about $100 million relatively quickly. But this is specifically designed for recovery. And I think there is an appetite for funders, even a need for funders to also adapt or die, because if they don't move this money, they die too, okay? The economy moves on credit. So rest assured, credit will find its way back into the market. It's gonna take some time, I don't have crystallized perfect options to give you day one other than go to Camino Financial. If you need money today, apply at CaminoFinancial.com. If you can wait a little longer as we calibrate ourselves and our approval rates, I'd encourage you to do the same. But at the same time, if you need it now, go today. And know that the economy doesn't, the economy, we're talking about the micro level adapt or die. The economy also needs to adapt or die, and credit is a critical element of moving money into moving the economy. And so rest assured, money is on its way. You just need to do everything you can to buy yourself time to adapt yourself to the times. And after that, there's going to be 2 to 3 years is only a blip in the scale of the longevity of your business, and you will emerge stronger and better than ever before.
And Sean, too, I think when we talked the other day, what's different this time than last time is that fundamentally, nothing was broken. Right? This was brought on by a virus. It was not because of bad behaviors of the players in 2008. It was irresponsible behaviors in 2008. So the foundations of our economy is still intact. It's just that we are being affected by this. And I am spot on with you, Sean, is that the industry, the banks and credit unions also have to respond for a couple of reasons. One is that if we don't respond and provide credit and support our existing customers, they're going to leave us and go to Sean. As much as we like Sean, we don't want to lose our customer to Sean.
We don't want to be a bank because I don't want to get regulated.
So, exactly. So just so you know, when Sean met me 5 years ago, I had the same hair and facial hair that he does. But because I'm on the banking side, look at the toll has done on to me. But then secondly, also from an economic perspective, we want to invest in technology just like Sean has, and different way of doing business, so we can improve our infrastructure, our bottom line. And in return, we can now offer credit back to our small business clients at a more competitive and meaningful pricing. So that's the kind of the economic equation, is that once we invest and improve and become more efficient, we can help more small businesses, offer them a much better rate. And so that's how we support the small business community and the overall community, by learn from this experience and then reinvent ourselves to be smarter, wiser, and more efficient.
Great points, y'all. Great points. And thank you all so much for ending on that very positive, very strengthening, note. Truly appreciate the both of you taking your time out today to have this candid discussion, to share the insights from traditional and non-traditional lending side. So thank you so much, Dean, for sharing your perspective and insights. Thank you so much, Sean, for also sharing your perspective and insights. What I will go ahead and do now is share my screen with your contact information. So if folks want to go ahead and take a screenshot of that, that is our contact information. I will also be following up with an email to include this information. So if you went ahead and registered, I'll be sending you an email to the email that you registered with a follow-up with these resources and their contact information. So you can stay connected with us also at AAPA. We're on social media, LinkedIn and Instagram. And I also wanted to share with y'all where you can find the recordings. I know there's questions about where these recordings can be viewed and where they can be found. Again, we are trying to make sure that we are delivering this information to the community, you all, and we want to make sure that we have this accessible to you as well. So this is our website. We revamped it due to the pandemic. So we have a resource page, and this is where you would find it. So click here for COVID-19 resources page. And this is essentially where you would find all the information. So these idea talks came about as a response to the pandemic, wanting to provide the content that y'all need. And it's all found on our resource page. So these are our virtual idea talks. These are all our previous ones. So you'll have recorded session links for ones that are available. So you can click on those. We'll have today's session up hopefully within the next few days. We really have a lot of work to do as a very small organization. So any support that y'all can provide us would be absolutely amazing. And part of that support is providing us some feedback. So this is where the recordings will be on our website. And also for folks who are looking for jobs, we have job listings available, and these are through our AAPA mentors. So the saying goes where it's not, what you know, it's who you know. Sometimes, yeah, it is who you know. That is the truth, and so it is, partially what you know, but sometimes that gets you your foot in the door, right? When you know someone. So this is our connection for y'all to take advantage of as a resource. And I just wanted to share with you where you can find that. And I also have what I will be sending you, this link for our feedback. So it's really important and helps us out a lot. I just popped that into the chat where we need feedback. We're a small nonprofit, especially with our programs, we need feedback from our audience and our community to let us know, hey, what do you need? How can we provide the content that you want? How can we also be better, right? And we need that feedback in order to continue on being visible, continuing to provide you with the content that you want. These idea talks came about because our community said, hey, we want information on this. We want information on liquidity options. We want information on how to help small businesses and employees. So this came about because we're trying to deliver what you're asking us. And we can't do that if we don't know what you want, right? So that's what this feedback form is. I'll also follow up with this in an email to y'all. So please stay tuned for that. Please help us fill out this form. Please also go to our website, for those resources. And please reach out to Dean and Sean. And, they have those resources for you as well. We definitely have alternative options in this day and age, in this new normal that we're all learning how to adapt in, because we don't want to die. So I'm going to, and with that, that is essentially our session today. So again, thank you all so very much for being present with us on these Saturday morning, workshop idea talks. It truly has been a very educational, idea talks for me, especially. And I know that if it, we're providing information for you all to take advantage of. So please do. And again, thank you to our speakers so very much for being with us today, taking your time. They're not paid, they're volunteering, their time and their content and information and their insight. So thank you all so much, so much.
Thank you for inviting us.
You appreciate it.
Yeah, so with that, look out for my email. Please click on that link, fill out the feedback form. We are here for you. Mentorship program, we're still taking members. So please share that with your community. We definitely want to make sure our mentors' guidance and support is valued and used. So we are looking for mentees to help out and to help guide. So I know that there are a lot of folks out there. So please share that resource too. Our program is still looking for folks, and we've significantly decreased it. And we actually have scholarship options too. So yeah, look out for that. And with that, I bid you all adieu. Please enjoy apparently your long holiday weekend. Take some time out and relax and enjoy. And
All right.
Thank you, Karen. Thank you, Francis. Thanks, Sean.
Everybody,
Bye.
thank you.
Thank you.
Have a good one. Bye.